Hey everyone, it's Helen from SMB Deal Hunter. Today we have Michael Young with us, an entrepreneur who acquired Bay Biz, an outsourced accounting and finance firm with his brother that's based in Washington, D.C., and is about a year and a half into running the business. Super excited to hear Michael's story today. Michael, it's great to have you on.
Alan, great to be here. I appreciate you having me.
Let's start with your background, Michael. How did you get into the acquisition entrepreneurship space? What were you doing before?
Yeah, so I think it kind of goes all the way back to the beginning. I grew up, parents, grandparents, great grandparents, all owned and ran little small businesses. And so, like, work to me was owning a small business. Saw my great grandparents own drugstores, saw my dad run a little manufacturing business. So then kind of moved into mechanical contracting. And so that's what work was for me growing up. And so I mean, you get a first row seat to the good and bad as a kid of small business entrepreneurs. And so I thought when I start working, I don't want the goods and the bads. I want something stable. And so for me, that meant big accounting. Like it doesn't get much more stable than big accounting.
Love
And
that.
so that's what I went and did. And they have a pretty good model at big accounting. Like there's always another ladder to climb. There's always another step, and it always seems like it's like, all right, just a little bit more, and then I can go to that next step. And so I spent, so I joined PwC and spent most of my time in the financial diligence, so quality of earnings, working for basically big private equity as they were buying businesses. And so did that for a long time and learned a ton, worked with a lot of smart people, saw lots of deals, and always kind of felt like you're just like one little tiny cog as like the accountant in the deal room. And so like a deal happening and always wanted to do more of like want to stick around, kind of see how the business goes, and not just kind of be dropping in the little points in time in like these businesses' lives. Um, and so got to the point where was close to partner, like I don't know, it was seemed like it was the next thing that was going to happen. And kind of knew if I took that step, like that's what you're doing. Like that's what I've been doing for the next 25 years. Now, partner is a great thing for a lot of reasons, but it was like, is this really what I want? And maybe it was that family entrepreneur itch. I don't know. Um, but along the way, my wife had did her MBA at University of Chicago, and she was like, "There's this thing called entrepreneurship through acquisition. Like, I think you should do it. You'd be good at it." And so she planted the seed. It took a while for that to like actually come to life, but that's kind of what started. So kind of just kept chewing on that for a long time. Learned a lot more, talked to lots of people about it, and kind of figured out the path for me was doing a self-funded search. And so as every responsible parent, as soon as my daughter was born, I quit my W-2 and decided to go find a business to buy.
Wow. Great time there. But your wife's always right. So that's really
Yeah.
interesting. So you actually quit your job and did a full-time search then.
Yeah. So yes, I did a little, which I guess one thing leads to another, but there was just through like network, did like some very small like freelance consulting, like fractional CFO, like FP&A type work while I was searching. Just I don't know, probably more than anything else, just to feel like me, I was like producing for the family and like have tangible benefits because that's like no one talks about it, but search sucks and like you don't feel like you're making any progress even if you are just because like did you buy this day or not, like that's the definition of success. And so like did some consulting on the side, like not a ton, but just a little bit to make me feel like I was doing something. But it kind of exposed me even more to like this fractional CFO outsourced finance world, which ultimately kind of is what Bay Business Group was. But yeah, that's what I was doing full time search. It was awesome because like I got to spend so much more time with my daughter than I otherwise would have. Kind of her first like right away, and so I don't know. Everything happens for a reason, but it was. I look back on that time and like it was wouldn't trade it for the world.
That's fantastic. And how long did your search take from start to finish?
Yeah, so it was 26 months. And so there was, mm, so I searched full time for maybe 20 months of that. And uh, there was we moved across the country, and so there was a few different things, but had basically, obviously, hundreds and thousands of people I talked to, ended up with 4 signed LOIs and 1 closed over the course of 26 months. And so ultimately, after 20 months, I decided I was so convicted on kind of the small business accounting world that I was like, hey, I'm just going to go after these types of businesses. That I just started my own kind of bookkeeping or fractional CFO space. I then went, so basically what, call it 0 to 1, but it's not like bookkeeping is like, I like the brand new service no one's ever heard of. But that's what I started doing. I was like, hey, I'm just going to put this up, put my own shingle. And it gave me so much more credence talking to small accounting firm owners as along the way. And so went to a small accounting conference, kind of 3 or 4 months in after starting my own thing, met David, who was the founder and owner of Bay Business Group at the conference. Literally heard him at the bar being like, hey, telling somebody else I need to figure out a transition plan or an exit plan for my company. And I was like, I'll buy your business. Fast forward 3 months and we closed on Bay Business Group. And so it's at the time we were a 30-person outsourced accounting and finance firm. And yeah, so that was about a 1.5 years ago, and it's been a whirlwind, but a lot of fun.
That's a crazy story. That's so interesting. So I guess where did your search start? What kind of deals were you looking at? What was your kind of, I don't know if you had like an investment
Yeah,
thesis or what did that look like?
yeah. So I think, I mean, this is not like brand new knowledge, but I think there's knowledge out there that's like, hey, you need to know kind of what size, you need to know what industries and kind of what geography, and like some sense of that. Was fairly tight on geography, kind of wanted to be in certain areas where family were. Had a few ideas around industry, and so it was kind of had to be a little more flexible on size. Had a family who was in the trades, who was in commercial HVAC. Obviously, that's a hot S&B play, but for a lot of good reasons, right? Like, and so that's what I thought often, like, hey, I'm going to be in the trades. Once I left PwC, I'm never going to be doing another accounting, never have to think about, like, other than doing my own books, I don't have to think about it again. And so that's what I thought I was going to be doing. So spent a lot of time there. There was a lot of other industries around that, but that was kind of where I started. So started talking to, my approach was, again, not original, but did broker outreach, did some direct outreach on like industries I really liked. And yeah, I mean, I think what works, like all of the above, I don't know. Just my metrics were like, how many owners did I talk to this week? How many offers did I make? That to me was like the 2 things I was trying to drive towards, like, did I close a deal, or am I going to close a deal or not?
What were some of the like what were your KPIs that you were trying to hit in terms of how many owners you were talking to every week or offers
Yeah.
submitted or things
So I
like
want to
that?
talk to, yeah, I was trying to talk to 3 owners per week. And then I wanted to do at least 2 offers a month was what I was trying to do. And so over the course of 18 months, I ended up, I think it was like right around 40 offers is what I ended up doing. And obviously four of them got signed as LOIs. I think, and so that's like roughly kind of how my numbers shook out.
Why do you think the out of the 40, what happened to the other 36? If you had to kind of bucket them into why
Yeah.
maybe you didn't win that offer or you pulled out or whatever.
Yeah. I mean, I think it's, there's probably half of those, it was just a broker process, a very competitive process. A and if you're running it through the like typical search fund criteria of like quality businesses, like they're going to be trading at the high end of like what you can do with an SBA loan, which is what I ended up doing. And so often it's just like that's why I always want to talk to owners was like, hey, I'm Michael, I'm a real person, I've got a family, this is a business. I'm not a private equity fund. I'm not going to be selling this in 5 years. I'm going to be owning this for the next 25 years. I care about your people. I see my family do it. Like that's what I was talking to owners about. And so obviously that can only make up for so much difference in like prices. Um, and so a lot of it was like me just learning, right? Like, hey, if the broker says it's going to trade for 8 times, your offer for 5 times isn't going to work, no matter what no matter how good you are at selling. So there's an element of that. I think it's also just there's so much, especially on the proprietary side, like, yes, you can find great businesses that aren't shopped, but just the seriousness of sellers are so hard to gauge. And you really have to, I mean, that's why it makes so much more sense for like funds to be doing it, because you can wait out like, hey, I'm interested. That seller may say that, and then it takes 3 years for that to actually happen. And so a lot of it was like, yes, I have a good conversation with the seller, like off market, but it's just when we feel like we had a deal there, and then it was just like, well, I don't know. And so I'd say a good chunk of it was that as well. And so I'd say those were the two biggest phenomenon of like what caused stuff to fall out.
What did you
And it helps to,
how are you finding these proprietary deals, or what was your approach there?
so it was just developing lists like in industries that I liked, like using all the kind of tools that are out there, to create proprietary lists. I found folks on like Upwork and Fiverr to like, hey, here's a company list. I'll find your contacts. And then would use kind of the CRM mail like marketing blast to kind of get it out there. And so I'd interned for a searcher before I actually went and searched. And so his approach was very like, I mean, again, not original, definitely stolen. Was like, hey, I'm so and so, I've got a family, I want a family business to buy. Like, made it super personal and not at all like I'm global fund or whatever, trying to do that. Like, made it very personal, and I think that resonates, right, with a lot of owners. Like, if you hear like kids and ages in an email, like you're probably more likely to respond to that buyer than you are like, hey, here's a free business valuation. And so that was my approach, and so got good responses, and so got a lot of conversations going. But I think it helped me a ton personally, like selling myself, position myself to sellers, which I think ultimately helped. But it was just a lot of I don't know. I mean, I did close an off-market deal, but it wasn't quite the same just from a cold outreach kind of thing. So people ask, like, should I do cold outreach? Should I not? I think it helps you just see things and get perspective. Is it going to find you a deal? I don't know. I think my one advice I do give on it is, as you come across brokers and you feel like they are good brokers, like stay in very regular contact with them, because they will help you get to the kind of the front of the line with as new deals come up. And so that's the one point I'd usually do throughout to folks is like, if you find a good broker, stay very much in touch with them. Because that it's not going to be proprietary, but it's also, you're not going to be the like 45,000 person to like look at something.
Yeah, no, that's interesting. What were the four that did go under signed LOI for you?
So one was, and this is one where I mean, learned a lot. It was a great, awesome business. It was residential, irrigation and lawn care. So basically, fill up 8 times a year, turn on and off sprinklers, and then put down fertilizer. And so awesome recurring revenue, like awesome recurring function. It was like over $1 million of EBITDA. That was a broker deal, and so we got basically all the way, like, got through most of the purchase agreement, got through loan approval, got through all this stuff. And I think ultimately the seller just didn't want to sell. Like the I think my last call with him, he's 69 years old, and then his exact quote was, "I'm 69, but I have the body of a 39-year-old. I'm going to keep working for another 30 years." And so I think it just got too real for him, and he got scared of what the other side looked like. And like there was a whole other set of books, and there's a lot of other noise, but I think ultimately that's what happened. And
That's
so I
crazy.
mean, it was, yeah. So I mean, it was an awesome, like, everything on paper was great. And so yeah, I don't know, but that was the first one. The two were both, one was another accounting bookkeeping firm, and it was actually, once Bay Business Group came in the picture, I kind of put them aside, just because it was a much smaller deal. And then the other was a property management business. And so that ended up not going anywhere kind of quickly thereafter. But yeah, that was before.
That's super interesting. And I guess when you did have these deals under LOI, especially like the first one where you're all the way to like loan approval, were you still working on other
Yeah.
deals? Like, were you still filling your pipeline then, or what did that look like?
Yeah. There's like the search thing of, hey, once you sign an LOI, then spend 50% of your time, 50% on your pipeline. Like as you go, you start spending less and less time on your pipeline. And so I'd gotten pretty like, there wasn't a lot of time being spent on my pipeline. And that was literally, I purchased a ticket to like move to that area and like close. And so it was like that close. And
Wow.
so, yeah, the pipeline was pretty dry. The pipeline was pretty dry. And so, I mean, that is like, it sounds stupid, like in from all things, but it is devastating kind of walking back from that and trying to like pick up what's left.
Yeah, I feel like I would need to go on vacation if I went that far fell through. That sucks for the broker too. I mean, in addition to I'm sure the broker
Yeah,
was
no,
not
I mean
pleased.
it was yeah, the broker was yeah, we'll leave it at that.
No,
Which is something that I didn't really realize it either. Like once you enter LOI, the broker's your friend. The broker wants things to happen as much as you do. And so they're helping kind of as long as everything's common sense, which is I didn't really realize at first, but the broker can be your friend to help you get stuff done because they're very much incentivized to get the thing closed.
Yep. No, that makes a lot of sense. What didn't work out in the other two, the accounting and the other
I mean,
property management?
it was just the property management was just literally like after a week like after signing a lot, they were like, hey, I'm not interested. I'm going to keep running it. So it was like
Wow.
fine, no harm, no foul. Like we're good. There was a lot of dead deal fees there. And then the other accounting one, it was at the same time Bay Business Group was happening, and I was just like, hey, I want to focus my attention here and let them go. There was also very heavy kind of owner concentration like with the clients, and so ultimately Bay Business Group was a better option.
That's interesting. At any point, since this is 26 months until you close the deal, were you just like, maybe I shouldn't do this anymore? Is that kind of why you ended up starting the accounting firm yourself, or was it just like, I'm still gonna go buy a business, but now I'm gonna try this on the
No,
side?
yeah, I think no, it was I don't know. I'd like to tell you my public answer is that was very convicted about the thesis around small business accounting and kind of the opportunities there. And it's really like that. And was just like, hey, and also like it resonates so much more. When I was at PwC, I was helping private equity firms make an extra billion, like adding to zero to stuff. And so like it's challenging, it's fun, it's fast paced, like you learn a ton. But at the end of the day, it's like, what did we do this for? Whereas like helping small businesses, local businesses, hey, that's an extra payroll they can have. They're not having to worry about payroll. You're helping them think through like very real problems that have a very real impact on them. And that was much more like that type of work resonated a lot more with me. And so like ultimately when I was looking at these types of businesses, I was like, you know what, this is the industry I want to be in. And so I'm just gonna start my own and then keep looking for stuff as I go. And so I mean the other answer is like I wanted to feel like I was doing something, right? Like again, did you buy a business today or not? Like, well, I started my own. Like that feels like you're doing something. So I don't know. It was probably a combination of everything, but that was it.
So when you were starting the business, I'm sure you're still pretty busy, trying to get clients, all of those things. Like how much were you spending searching? I know you said you went to the conference, but was one of the goals of going to the conference, maybe like in the back of your mind, you're like, maybe I'll meet someone who wants to sell, or was that
No,
not part of
no, yeah, no, that was part of it for sure. Like I knew, I mean, that was going to conference had two goals. Like it was a small accounting conference, so I knew like they had thoughts around how to operate a small accounting. Like obviously needed that from sort of my own, but I also knew that there's going to be people there who could be potentially interested in selling. So it was a twofold kind of purpose for me. Um, the but yeah, that was because when I was going to the conference. I think as far as getting clients and doing that whole thing, like I mean, I started. This is kind of embarrassing, I don't know, but like I literally started on Upwork for like 25 bucks an hour, and my first client that I got on Upwork for 20 bucks an hour, like is now like I don't know, a huge client for us. We're doing tons of work with them, and like still to this day, like 3 years later, like we're doing that. And so it's crazy how like I just came in for 20 bucks an hour on Upwork, started doing stuff for them, and then like it just one thing led to another. And so that's why we got my original clients. Was like, hey, I'll do something on you very quick on Upwork, and kind of one thing led to another from there with them. And so it was not the challenge. And so, yeah, most of my time, like, very quickly flipped to execution and not selling.
That's a no. I mean, no shit on Upwork. I love Upwork. I use Upwork for everything.
Yeah, I mean, you'd be surprised. Like, there's rent, like, I don't know. So yeah, I mean, I still use folks on Upwork for different things, and so yeah, it's crazy. It's crazy the opportunities that are out there.
So when you were actually at the conference, by the way, side note, I feel like now I've spoken to a few people who've met their, final business they acquired at a conference. So it seems like that may be something that's still a very viable path to finding your actual acquisition target that not everyone wants to spend the energy doing. But how did that
Yeah,
conversation
I
go?
mean,
When you heard the guy at the bar saying he wanted to sell or transition.
yeah. So I mean, I mean, that conversation was like, hey, yeah, like, look, I'm just starting my own thing, looking to grow. If you're interested in someone stepping in, trying to figure out transitions, it'd be awesome to talk. And so that's what the conversation was then. And then I was like, got them the next day. We went and got lunch and kind of talked a lot more, explained kind of my background, kind of why I was doing this, what I wanted to do, what I saw with the firm, kind of. And he explained a lot more about him and what Bay Business Group was. And so, I mean, again, if I was in PwC, my eyes would be super back in my head. But there was a lot of value alignment and kind of what we saw as far as like what mattered, that then one thing led to another. And so, yeah, and that's honestly what happened. So literally we got up from that lunch table and then 90 days later, like, we closed. It's I I'll let somebody else kind of figure out like what is the moral of the story from all of this, other than just like, hey, do like action is good. Like, if it's action towards things that you're trying to achieve is all good. Like, sitting at your computer trying to analyze an industry, I don't think is the best use of time. But getting out talking to people, I think is good. And so if you're going to conferences and industries that you're in, I think that is good. If you're talking to owners, I think that is good. If you're trying to sit at your computer and trying to analyze the next best industry to buy in, like, I don't. That's I think, to me, my advice would be to go talk to people. Like, and even if you think it's an okay industry, like, just go talk to them. You'll learn a lot more that way.
No, 100%. I'm curious what happened in those 90 days. You sat down for lunch, you were just like, okay, this makes sense. Like, I mean, obviously he wasn't actively trying to sell his business, right, at the time. He was just like thinking about
Yeah,
how to transition. So how did you get from there to like aligning on valuation, especially because there's no broker involved? I'm sure the valuation piece was something
yeah.
you had to think through, or what happened?
I mean, so it helped because he had been thinking about, right? I mean, he was thinking about, he knew this was going to happen, and he's a smart guy himself. And so he knew kind of what he like thought he had a reasonable valuation in his head. He was, again, a kind of accounting and finance professional. So like there wasn't as much of a translation to accounting and finance numbers as maybe there was for other industries. So I think that definitely helped. And so that's when I also knew, like, hey, this isn't something where, like, hey, I'm gonna put forward a fair price. I'm not gonna try and, like, it's off market, so I'm gonna try and get this for pennies on the dollar kind of thing. Like, it was kind of a, let's all be adults. Like, here's what we think is fair. Let's get this done. I didn't put forward a super complicated structure. Here's a straightforward offer. Here's what it means. And I think he also knew that, like, he felt like his options to sell were kind of going to be putting his firm into a bigger pool, whether it was a bigger accounting firm or into a bigger private equity platform. And so he liked that it was like, hey, here's two brothers. Like, he's like, I don't know how, when they're going to come across again. I'm going to come across two brothers who are capable of stepping in and not selling to a platform. And so that appealed to him. I'm not saying it's going to appeal to every buyer or every seller, but like that was definitely a good sell to him. So I was searching by myself, was doing this all on my own, and kind of once I was like, hey, there's an opportunity around accounting. Again, my wife, she was like, all right, I get it. How do we get faster? Like, what's the way to, like, increase the ROI on this? And like, well, if I could double myself, that would be good. And she was like, your brother has the same skill set. Why doesn't he, like, what would you think about that? And so that was kind of like, and brother and I both have, and so it was kind of a value alignment there. We knew how we both had the same approach to kind of people and culture and all of that. And so once started talking to David Business Group, I was like, hey, here's what it looked like. and my brother was still at UI at that point. And so I was like, hey, once we close, he's going to jump in with me. And so he had been planning to join me in kind of our own startup accounting thing at some point, kind of around the same time. And so once kind of Bay Business Group came on the picture, it was like, okay, yeah, now's the time to jump in.
No, that's interesting. And you mentioned that they already had 30 employees. I know a lot of folks who are looking to buy accounting firms, they're very much worried about partner of the firm owning all the relationships and losing those. Like, how did you kind of think about that?
I mean, it was definitely, I mean, I looked at hundreds and hundreds, maybe 1,000 accounting firms trying to figure out the right one. And I was always like, that's always the concern. I think things that I was looking for, like, is there some level of managers involved that also have relationships? And so that, I mean, there's, if you're not concerned about that, you could go on probably on Biz by Sell right now and find an accounting firm and buy it tomorrow. But that's the concern, right? And so that's always, I mean, so I was super picky, right? And it needed to be something where I felt like there was a management and client relationship ability there, which there was. And so I think that's what helps justify a lot of things about kind of the price and valuation with the accounting firms.
And what else were you looking for? Like, what if someone's looking for an accounting firm now? Like, what should they be thinking about? Um, other than that, I guess.
And so, I mean, I think the biggest thing is what is the expertise and what is the like degree of difficulty of that expertise and replacement expertise. So that's where like and so that's where I think it relates to kind of what is the services they're providing. And so the more specific around tax, especially, is harder to replace. And so the more they're either doing more general tax, if it's like some kind of tax witness or like going before courts and like fighting the IRS, like that's really hard to replace. And so when I was looking at kind of the quality of revenue, it's like, what is the repeatability? What is the ability to kind of plug in somebody else and do this? Because I mean, it's not a secret. There's an accounting supply challenge, right? And so what's the ability for you to go in and find somebody out there else there to do it? And that's, I mean, you see accounting deals priced what looks like good multiples, like good STE multiples, but you have to plug in a six-figure person really to kind of come in and absorb that. And once you plug that in, like they don't look nearly kind of what they look like on paper.
Yeah, and what did you guys know that you were both going to be like very active operators? Or what did you foresee your role being once you actually took over the accounting firm?
Yeah, so it was kind of the way we split it is so I'm basically helping bring clients in and bring kind of finding people to bring in. Matthew's kind of responsible for kind of, hey, once everybody's here, he's kind of overseeing the operations and execution. Is kind of how we divided. And so I very much wanted to be involved. Kind of going back to that original, like, hey, one of the clients I want to like be supporting, like I just wanted to be involved and kind of see it firsthand, managing firsthand. Am I involved in clients now? Yes, some. We've got a great management team, so I'm not super involved in client service, but still can kind of lean in here and there to help where needed. And so, yeah, that's kind of how we divvy up roles.
No, that makes sense. I'm curious, how did you end up structuring the deal with the seller? Was he involved in for a period of time? What did that look like?
And so I mean, it was super straightforward. So we just did kind of cash and close, did a seller's note. And a lot of accounting deals typically have something tied to client revenue retention. To your point about like the seller has relationships, that's a concern. So it makes a lot of sense to deals are priced that way and have that contingent mechanism in them. So David's still been involved. And so he's still around. He kind of just helps us with like as a board, basically like a board of director, right? And so like as people issues come up, as client issues come up, like, hey, what do you think about this? How would you approach this? And so that's been really helpful. And so that's kind of how he's fit into it.
So he was always going to kind of continue staying involved, or did you kind of negotiate just a long transition, or what did that look like?
Yeah, so we had 3 months transition kind of formally in, and then it was kind of like, hey, let's see where we are after 3 months. Because having seen deals, like you never really know how it's going to go. Yep. And so, I mean, that's maybe the biggest other takeaway is, yes, we felt like we did great analysis around industry and business and understood all this stuff, but at the end of the day, like the seller is half of it, if not more of it. And especially like as we were trying to get comfortable around like, hey, is this thing going to blow up or not? Like seller risk to me determines whether you're going to have a tail outcome or not. That's kind of a bad tail outcome. And so we got super fortunate. David's been amazing. Like of all the deals that I saw kind of beforehand and even during, like he's been entirely supportive. Like he is on team Michael and Matthew like all day, every day. And so that's made it super easy for us, and has also helped keep employee retention high, client retention high. And so like, I guess I'm just calling it good luck, like that he's continuing to stay involved. And so like, that's been another reason, like it makes sense. A lot of times people are like, hey, get the seller out after 3 months or however long, but it's been a good thing. And so like, we're not really trying to end a good thing. And he's been very deferential to us. And it's like, he lets us make decisions. Like he sees it as our thing where he's still supporting us. And so, yes, that's why it's continuing to be a relationship. I don't know that again, like, what's the lesson? Should everybody do this? I don't know, probably not. But for us, it certainly worked.
No, that's great. And what do you think? Did you go through the SBA process again when you bought this business?
I did. And so, I mean, I'll shout them out. Like Live Oak was awesome. I mean, they had an accounting practice, like lending group, and so like they knew the deal. They knew what it looked like. I mean, I had a CPA, and so like, it was easy to like. And so yeah, like we approached them, like we found the LOI, started talking to them, and like we were good to go in a short amount of time. And so yeah, they were super easy to work with.
No, I mean like 3 months from LOI to finish is I feel like it's fantastic. I mean, people always strive for it, but how many people actually hit that 3 month
No,
or
I mean
not so
that's
many?
what was like. I've been involved in hundreds and hundreds of deals beforehand, and I was like, I've never seen a deal timeline happen, but it was like this was the one where it actually happened. And then, I mean, I think that was just like, I mean, I literally felt like it was like my life to make this happen, and so it had a lot of things riding on it, and so it was like, let's make this happen. And so I think if it had drug on, like, I don't know. And again, to call out my wife, and so in the middle of this, so I come back from the conference, and she's 8.5 months pregnant and due with our second child in 2 weeks. And I was like, all right, well, I found like the best business I've seen. Met him, like, feels like a great fit. But I'm like, I don't know if we can do this right now. Like, our life's about to be chaos. And she was like, time kills deals. Like, get this done. I was like, all right, here we go.
Good for her.
And so
Wow.
that was the other reason. That was the other reason why I got close to 90 days, because she's like, if I could do this whole like have a kid thing, you can at least close the deal in 90 days.
I love that. That's crazy. What and at this point, did you bring your brother into kind of diligence and things like that, or at what point
Yeah.
did he kind of come in?
He was also at the conference with me, so we got to meet David then. And so he was involved in kind of diligence the whole time. Like when we were meeting with David throughout it, he was involved. Um, and I mean, I think also what helped close in 90 days. And so we got 2 weeks from closing, and Matthew was like, all right, David, are we doing this? And David's like, yes, we're doing this. He's like, all right. And so he gave notice to EY. And so I think that also helped. Just, hey, we're like, we have burnt the oars or done whatever whatever the analogy is you want to use. Like we were all in. And so I think that kind of helped also push us across the finish line.
Yeah, I imagine if afterwards the seller was like, "Yeah, change my mind," that would have been horrible.
Yeah.
Um,
Yeah.
that's great. And what happened, I guess, first 90 days, what did that look like? Obviously the seller is still involved, but what did that transition look like?
Yeah, I mean, it was a lot of us just trying to understand kind of accounting and finance can involve a lot of things, and just trying to understand like what our clients are, what are we doing for our clients, understanding what the team is, how do we support the team. And so, I mean, there's definitely a whole like the team's feeling us out. We're trying to get it like, no, we're not these like scary random people that are coming in. And so, yeah, I mean, that's a lot. I mean, that's a pretty generic answer, but you don't really know what it is until you kind of jump in. And so everything kind of looks good in a spreadsheet until you start kind of shaking hands and seeing people face to face, then it all looks very different.
Was there anything in particular that was unexpected after you guys took over?
Yeah, I mean, there had been there had been a kind of a key employee that had left maybe half a year before. And so we had seen, kind of going back to your point about client relationships and the importance of client relationships, we hadn't really seen much churn with her clients over the kind of the 6 months for the deal. And so like, we felt pretty good, like, okay, these clients are sticky, but kind of coming in as they're talking to people and meeting people, like there's clearly pressure with her clients. And so but like, I mean, this person they had was phenomenal. And so it was just a change. And so change is always hard for kind of everyone. And so we kind of felt that pressure. And so there was definitely, that was kind of a challenge. That was one of the first things we were kind of dealing with, is trying to work through that. I mean, not like a devastating blow by any point, but there was just pressure. And so we felt that at first, but again, like kind of all things considered, like it's gone, like we're really happy with how it's gone.
What do you look for in terms of metrics for, or KPIs for churn and things like that when you're looking at an accounting firm? Now that you're running one, but also as you were looking at them, what is sort of like the North Star?
Yeah. So I really wanted a lot of bookkeeping revenue. There's a lot of firms out there where it's very tax heavy, and it's very hard to, again, like you probably could have Brandon Hall on here and he would tell you something different, but to me, it's hard to manage tax because the production is just like all over the place. And so there's a higher degree of difficulty in running that. Whereas the bookkeeping, like it's pretty simple, like month to month. It also lets you kind of be staying consistent with clients. And so I like that a bit more. It's also like, I'm not a super tax guru. Like my nature is much more like QV, finance, accounting, like let's talk about like forecasts and models, and I am like, let's try and think of like some crazy tax strategy. Like I just lean more towards the former. And so thinking about a business that I want to like be involved in and build, like I see the value, how we can easily creep up the value on like the outsourced finance and accounting, where like we're doing fractional controller, fractional CFO type work. The moving from like a tax preparer to tax advisor to tax strategist, that's not a muscle that I necessarily have right away. So that's easier for me to kind of push the other side as a leader. And so that is, to me, like what I was looking for then. Like, okay, I want more bookkeeping revenue than I do. It feels more recurrent. It feels stickier. And then again, kind of going back to like the expertise piece, like how hard is it to fill in? Like the tax preparer is just, it was a skill set I wasn't really familiar with how to recruit for and how to find. And so it felt easier to kind of fill in the kind of staff accountant side.
And what kind of, I mean, how sticky are the clients now? Like now that you've actually taken over, have they proven to be as sticky as you thought? What's like a good metric to target there?
Yeah, I mean, I think most it's like 10 to 20% is kind of what you would see is like normal churn. And so, yeah, that's kind of when we're looking at firms, like, what is this? I think every single time you look at a firm and they tell you, yeah, we've got 5% churn, you go in and look at it and it's always like 15%. Like everyone always underquotes it. Like, but I think that's every industry.
That's funny. No, that's hilarious. And I guess since it's been a year and a half now, have you been focused on growth? Have you guys grown the business? What does that really look like for you since taking over?
Yeah, so we've been able to grow. So we're at a little over 40 people right now. And so it's been fun. Like playing offense is fun, right? Of going, getting clients, finding people, getting people on the team we're excited about. And so, yeah, we've been able to grow. And I think it's helped. Like again, kind of David was super intentional in how he built the firm. Like we're focused around a couple of different industries, and so that's helped. Like having those niches has really helped. And because it has a clear value prop to the client. Like we understand your industry, we understand your accounting problems in your industry. It also helps the team pattern recognition of like, hey, client A is gonna have the same problem as B and C, and so they can then add more value across. And so like that's kind of a mutually reinforcing thing. And so that all helps kind of that growth process. And so yeah, I mean, candidly, like we want to continue to grow, like we're growing at a healthy clip, like because we've got talented people on our team and we want them to stay here. Like we need opportunities for them to stay internally, right? Like if we stay static, like people don't have opportunities to kind of move up and take on new responsibilities. And so that's a big reason why we're looking to grow and continue to grow.
That's great. What are the industries you guys are focused on now?
So we're about a third government contractors and about a third nonprofits. And so there's specific rules kind of around government contractors have. So like basically if the government gives you money, they want to know how you spent that money. And so there's basically accounting around that. And then nonprofits, the same thing. Like if donors give you money, they want to know how you spent that money. And so there's more hurdles that like a couple $1 million nonprofit or government contractor does than like a typical couple $1 million revenue business has, as far as kind of how their accounting has to be set up. And so that's where we come in and kind of help. And so our like core client is like 10 to 20 employees. It doesn't really make sense for them to have a full-time like 80 or $100,000 accountant on staff to be handling this. Like we can come in, handle the daily accounting, but also give you a piece of that controller and a piece of that like fractional CFO and a piece of that tax advisor that like you need, all for a little bit less than kind of what that full-time staff is. And so it's like, that's kind of a win-win for our team. It's a win-win for the client, it's a win-win for us. And so that's kind of how we fit into our clients' operations.
That's super interesting. Did you guys shift that way, or was that already a core sort of client when you acquired the business?
Yes and yes. I think it had kind of developed naturally, and I think we've just kind of continued to lean into it as like, hey, there's something here for this. And so yeah, that's how that's what we've focused on.
Oh, it's interesting. And I guess looking back, I know we're almost at time, but through the past couple of years, is there anything you would have, I guess, done differently, or for someone else who's just starting this process, like just starting their search, any sort of advice there?
Yeah, I mean, so the I guess the biggest piece of advice is um maybe I didn't appreciate it going in, is like it is very hard. Like it sucks. Search is very hard. Like it's lonely. Like you don't, which sounds stupid. Like, hey, you're talking to brokers and trying to find business to buy. It sounds like fun and sexy, but it is really hard because you feel like you're not making progress. And most people going into search are used to like overachieving and being very successful. And so point being, like what I encourage people to do is like develop formal or informal like peers that are going through the same thing. Like reach out to people, stay in touch with people, have weekly calls with people who are going through something similar and use them, right? Just maybe yes, you can use your expertise, but just that emotional element like isn't easy and isn't just to be overlooked. Like acknowledge it, address it, and kind of keep it going. Because I think that's it has a big toll, and I don't know that everyone always thinks about that. Because there's plenty of smart, super successful, super motivated people that go into search, and not everyone has a great outcome. And so just being cognizant of that. Like I obviously got the coin turned up, lucky for me. But not everyone has that. And so I think kind of having people you can talk to about it as you're going through, I think is one of the best things that people can do.
No, that's great advice. But and how does it feel to, to be on the other side now for a little bit of time now, was it all worth it? Is it everything you sort of expected it to be now that you actually, are an owner of a business that you acquired?
Yeah, I mean, it's still very early days. Like we're still a year and a half in. Like I still feel like we're trying to figure it out. I guess that's how maybe we'll always feel. I don't know. But yeah, it's been fun. Like there's definitely the biggest difference is like the good days are amazing, the bad days are very hard. But like it's still very much in that positive. Because I mean it's all it's you try to tell yourself not to, but like it's all personal, right? That you take it all personally. Because ultimately like it all falls back on you. Like if a bad thing happens, like you probably could have done something to address that differently. And that's what, again, going back to like family who was in small business. Like the first things my dad told me, his grandfather told him this is like, you can never get too high, never get too low, like in business. Like you've got to stay even killed because like if you have a good day, tomorrow you got to be ready because you can't just get destroyed when something bad happens. So that's I mean, it's easy to hear the advice, but it's one another to kind of live it and practice it.
Yeah, I was just gonna say it's great advice that I probably need to also take. But no, that's great advice. Well, look, Michael, I know we're at time, so really really appreciate your time today. For those that are listening to this and want to reach out, whether it's maybe becoming a client or just want to reach out in general, what's the best way to reach you?
Yeah, you can find me on LinkedIn, or you can email's good too. Just Michael at bay-biz.com.
Awesome. Well, Michael, no, it's a Friday afternoon, so I think it's time for you to be with your family. So really, really appreciate your time today, and really excited to keep following your journey and see where things take you.
Well, yeah, thanks for having me, Alan, and appreciate you doing this. I think it's awesome for people to hear stories from folks, and so I appreciate all you do.
Thanks so much.